This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. We're hearing big news in PENN Gaming, and we're seeing flow in DraftKings. Let's take a look. So this was the big news in PENN Gaming today. ESPN and them struck a $2 billion sports betting deal. Dave Portnoy bought back his Barstool Sports. So we see here, PENN will pay ESPN $1.5 billion over the next 10 years. And this is interesting. They're granting ESPN warrants to purchase 31.8 million shares of PENN worth $500 million. Now, that's interesting because Disney owns ESPN. I don't think Disney wants to own PENN Gaming. So it makes me think that they are planning on IPOing, splitting off this ESPN. That would be positive for Disney, but Disney's down on the day, so maybe I'm off there, but that's what it seems like. I don't think Disney wants to own PENN Gaming stock. And so I just think it opens the door for an ESPN spinoff. But that's just my quick read. The other interesting part was in the press release, ESPN said ESPN Bet, which is what it's going to be called, will become the network's exclusive sportsbook. PENN Entertainment will receive, this is big, odds attribution, promotional services inclusive of digital product integrations, traditional media, content integrations, and ESPN talent access, among other services that collectively generate maximum fan awareness of ESPN Bet. That's big news because they're getting the advertising off of ESPN's talent media base. I mean, that's big. That costs a lot of money, and I guess they're paying it up front, so it's 10 years, 150 million a year. But that's pretty big. And then access to the name, all big. Notice that PENN Gaming comes in to buy them, and PENN Gaming, what they wanted to do with Barstool was get Barstool's following, obviously the young crowd, but then get the young crowd into the casinos, because ultimately that's where these guys all make the most money. The customer is more valuable to the gaming company, the casinos, than they ultimately probably going to be to the app. Okay, so we'll get that to in a second. But on this news, as you can imagine, DraftKings traded lower today. Stock's down about 10% on the news. And initially, I'm talking right out of the gate. This was at 9:47, 15 minutes in. Someone came in to do a pretty large trade in DraftKings. Looks like they were getting short. They were, looks like, selling the 32.5 calls and buying the 29.25 put spread. I think it's a really interesting trade. The way they did it, I'll explain a little bit of the logic that I think happened in this trade. And let's just take a look at it first here. So it was at 9:47, and let's give you an idea of what DraftKings was doing at 9:47, just to get an appreciation for what happened here. So this is the morning, the open. It opens here at 28.81, shoots up, down, and then shoots up to here at 30.16. Now, this printed at 9:47. Okay, so it printed here at 9:47. Here at 9:47, the stock was 29.59 off of the highs at 30.17. So it was already off 50 cents. Now, it printed at 9:47, but this trade was done by someone, so let's call it a hedge fund. They were coming in here. It takes a couple of minutes to price this trade up. And so they were coming in here, talking to the investment bank, saying, this is what I want to do. I'm sure they didn't want to sell the 32.5 calls at 10 cents and sell the 25 puts at 4 cents. There's no reason to be selling puts at 4 cents. The issue is that the investment bank likely doesn't want to sell the 29 puts by themselves. So what they say is, we will do this trade, but we won't just sell you the 29 puts. Okay, because just selling you the 29 puts, there's a lot of risk, and the stock is moving fast on big news. So they do this trade, the three-legged trade, because they can't get the liquidity just on this trade. Okay, and partially because it looks like this open interest this open interest here, is them, and they're long those puts, and the person is actually bailing out of those puts as well. So they're willing to bail out of these at 4 cents. They're going to sell these 10 cents to appease, both of these really are to appease the 10 cents or 4 cents are to appease the investment bank. And what they really want is this 29 put at 74 cents. This below the bid, I wouldn't worry about that right now. I'm pretty sure this is how this trade went. And I wouldn't worry about that because in a fast market at 947, this structure can trade below the bid, above the, they're just trying to print it at some point and at some level. And the machines might pick up somewhere, whether it's almost like it's a late trade and the stock's moving all over. So the bid when it printed could be different than the bid when they agreed to the price. So they're just out there, the investment banks out there just trying to get it on the tape and try to get their hedge off. You can see that this traded at 29.54. Now the stock is 28.51. This is 1.25, 1.2 represents 1.25 million shares. On a delta, it was probably half of that when it went up. So it's about 600,000 shares for sale, and the stock went a little bit lower and is still under pressure. I think the news is not great for DraftKings. Obviously, that's why it's down. You have a competitor, PENN Gaming, that just got a lot stronger with the ESPN brand behind it. This is a quick 1 week option. This is basically someone wanting to get short in a big way very quickly on the news right out of the gate. So what are they looking at? They're looking at getting short here at 29 and looking for a play lower. When you think about the RR dollar, we could see what it says, but essentially, this is a fast moving, almost like a delta play, which means a directional fast moving. I want to get short. This is the best way I can get short with 1.25 million shares below 29 quickly. And they do that. And it's a tough trade for the investment banks, and they bite the bullet and probably did not get their stock off. You see how the stock went immediately down. The bank is not allowed to short the stock until it prints. So it prints at 947 and the stock immediately dropped another 40 cents. Came up a little bit and then dropped another from 29 and a half, it dropped another 70 cents. So it was down about 70, 80 cents from where this thing printed. But remember, they negotiated it somewhere around here as it was going towards 30. So this had a hurt for the bank at the time of the trade, and they're probably still trying to get some deltas off and don't want to pound it, but eventually they're getting some stock off here. So let's take a look at, because this is really just getting short quickly. Let's take a look at what the hedge fund's probably thinking here. Obviously, bad news. The stock has had a tremendous run from 10 straight up to 35, 34 and a half. So this is 34 and a half. Let's keep that there like this. Actually, don't like DraftKings as a stock. I think that, yes, they're taking share. Yes, they have a great brand. People know them. At the end of the day, this online sports gambling business is a very, very, very difficult business. Its margins are tight. When someone wants to get into the business, they can drive. There's no loyalty. We're talking about gamblers. It's like buying a stock as well. If Apple's trading 193, it's trading 193, or wherever it's trading 190. If someone says, yeah, but we're this great broker and you can buy Apple here at 191, people are not buying Apple 191 if they can go down the block and buy it at 190. Same thing with sports. If the line is a certain line, everybody's going to where who has the best line. That said, when everyone is pushing that line tighter and tighter to attract the customer, that's what reduces margins. Margins are if you can get the better line than everybody else. Well, that's going to be squeezed. So how do they increase the margins? They increase the margins by coming up with parlays, in-game betting, which are tougher for the customer, the consumer, to win at. And so they win at the expense of the customer, which is never really a great business model. But ultimately, the winners in this game are going to execute their business at flat or close to flat. Let's call it margins at 5%. And that would be a win, because they would then take that customer and bring them to their casino, bring them to a concert, bring them to wherever they want to go, right? On their live platform where they make money on drinks and restaurants and also gaming, live gaming. That's the real story for these online apps, is who's going to who's going to make the money when they bring them to the live area? DraftKings doesn't have a live area yet. I thought if the stock got down below 10, if it broke 10, that Las Vegas Sands would probably say, we'll take that because it is valuable. It is valuable, but as a standalone business, I'm not sure that it's going to be this great business that's going to keep generating huge amounts of money. I may be completely wrong, but the online sports bookmaking or bookmaking in general has never been this business where you can make a lot of money. That said, stock is tripled. So, what do I know? But the stock broke 30 here. You could see here what they were attacking right when it went up through 30, dropped below that. The stock has been weak since. This here is probably a decent range that they're looking at. You can see just a decent amount of activity in this range. So I'd be looking at let's see, X marks the spot, somewhere around here. And what's interesting is someone came in and actually sold puts right here. I'll show you that in a second. They sold the October 22 puts. So let's see that here. So October 22 have puts, 55 cents. They sold 10,000. So you could see, and this might be these guys. The people who sold this is probably them. So they basically said, all right, we're going to get a short here at 29. And then, yeah, we buy it at, let's call it 22 and a half. So they net are paying nothing here, right? They sold this, sold that 14 cents, 60 cents. So they paid 60 cents for a short at 29 right now. And they sold these puts at 55 cents. So for a nickel, they just got short 1.25 million shares at 29, with the stock trading 20 and a half. That's pretty damn good right now. So that's what happened here today. I just wanted to show you this. I wanted to show you how it popped up very quickly at 9:47 on the board. And when I looked at it, I just thought, wow, that's pretty interesting. And then later on at 12:05, right when I started looking at this, I see, oh wow, they actually then sold the puts at 55 cents to make this trade basically a free trade if they're definitely buying it at 22 and a half. And you're talking about someone like a BlackRock who's saying, I buy a million shares at 22 and a half, not a problem. But for right now, we want to make sure we protect, 29 to 24, 25. So again, I just thought this was really interesting trade, something that we're looking at. They're short. I think it's the right trade to be short up here against 29 and a half, 30 into this range right here, 24 to 26. So there's DraftKings. That's what we're seeing. I personally don't like the stock over the course of time, long term, but in the near term, you had an upgrade yesterday saying the stock can go to 49, and it could. There's no doubt it could. I'm not saying it could. I'm completely wrong. This stock. It's been very difficult to catch the stock. But if you see here, one thing you should notice is that we talk about like the volume increases and how, these big spikes. You saw this big spike over here and over here. This is a lot of volume coming out with the stock dropping towards 10, 11, 12, and then it came up. So a lot of these people might be out. A lot of this, when we talk about people who are stuck, they actually might have blown out here because of this. You could see the volume here. So volume in, volume out, and then it just took off here. But someone's getting short here down to, they think 22 is the right level, 22 and a half. Call it 22, 22 and a half is the right level. Okay, that's DraftKings. Make sure you smash the like button, ask questions, comment. I'll see you tomorrow.